Okay, in today's video we're going to take a look at SMH. Now, as far as my bigger picture work that I did way back when, I know that we are close to the initial upside target at the 123.75 area. Didn't quite make it. We got up to 120.71, but what's happened now is that we've got another entry opportunity with really well-defined risk. And it comes from this prior high to low swing, $7.23. This high to low was a little bit less than that, and then this high to low ended up being $7.22. So it came into the support between the 113.14 to 114.10 area. Now actually you can get rid of that one because we're through it, but the other zone catches it. And this is almost equal, 723 versus 722. So if this low continues to hold, your upside target is going to be the 1272 extension of the swing into the zone, which means that the target's going to be 122.67. What's the risk? Well, at this point, the risk is either defined underneath this low at 113.49 or underneath the low end of the zone, which is below 113.14. Okay, so you're basically, looking at buying as close as possible to the definition of risk, and then, the upside potential is, gives you a really good risk reward, better than, at least like the 3-to-1, if not better than that. So that is a setup. It did trigger, at least on the short-term chart. So I just want to give you an example of what that looks like. So here's, for example, just looking at a test of that support, that 113.48 area. This is a 1-minute chart on, actually this is e-signal. And where was the trigger? Well, on the 1-minute chart, here is the moving average crossover, and then it also, did take out a prior swing high. So at that point, that meant you could be a buyer, and you can place a stop underneath this last low. And so far so good, but whether it makes the target or not is another story. But the good news is you have definition of risk, you have what your potential target is. So that's about all you need to know right now. Have a great weekend. I will see you guys next week.